Good afternoon, everyone. I hope you've had a good weekend. Yeah, I know it for a fact that so many people had a very, very nice weekend. You know, Friday was non-farm payrolls, and this time, this event went according to plan. You know, every kind of technical analysis that was there. You know, Friday we looked at that chart. It was the last chart we looked at, the Euro USD. Every chart that had the USD in it. Yeah, normally the most obvious chart is Euro USD. Gold had much more profitability, as you know, as it always does. Yeah, but this time for the Euro USD, you know, it was as predictable as possible. It was too predictable, and if you followed it up and sold, then you made so many pips. There were so many pips that day, and everything went according to plan. Up to right now, where the price is, it's still being supported. Where it is, we're going to look at it in a while. But anyway, it was really nice, and you know, so many people were very happy about it. You know, when an event like non-farm payrolls, you know, when it gives you that big volatility and everything goes according to plan, it's like a gift. You know, it's like a gift that's just something given to you freely. It was really, really nice. It was very, very nice. I hope you made a profit. You know, if you bought on Friday afternoon, and if you made a loss, yeah, it should have been a very big loss. Yeah, that is really bad. But if you had a very small risk there, if you're trading with a very small lot size, according to your account, then you know, price where the price is right now. We're going to look at it in a bit, but where it is right now on Euro USD, especially, it's at a support. It's at a support level. If it breaks that support successfully, then there's a new trend that is coming through. Yeah, so that's the whole. Okay, that's the only drawback. But if it somehow reverses and you have a new upward trend, then you can recover some of your money in that trend. But if it continues, you know, it will be very bad. You'll have to put your stop loss just below where it is. If it takes that stop loss, then you start looking for another trend downwards. It will be a confirmation of another downward trend. So if you don't have a stop loss in there, and you put in your trade on Friday, then yeah, that will be very bad. So put in your stop loss, because this move is something fundamental. It's something totally fundamental. Yeah, so today we don't really have many events. Let's take a look at the economic calendar and see how many events we have today. There's only one high impact event, that's consumer price index affecting China. Yeah, so that one, it was at 4:30 a.m. and yeah, I don't think we really trade USD CNY. USD CNY. It's not a very common chart. That which is common is USD CNH. But anyway, this one here, we're getting these events here on the economic calendar. So yeah, should start looking out for these charts and see how to apply their fundamental events. So that was the only event there today. Maybe later on there will be a speech from someone from the Federal Reserve. It's now moving properly downwards. You know, so many people were saying that, you know what, the week has begun and the Euro USD is now bullish, and yeah, but then it is, you know, it's now bearish. It looks very, very bearish, and this news could come out and push it further, maybe past that that support level, which is it's right now, it's at a support level from the previous bottom. It's at some kind of support level there, and yeah, it could push further below. And then, you know, we just keep on, trading, selling. You just keep on selling, and yeah, it's good to always do the obvious thing in Forex. Yeah, so you know, most people always call and say, where is the chart heading now? Yeah, they just keep points on this chart. There are some areas which are very predictable. Other areas are not predictable. You can't easily predict what's going to happen. They are not that predictable at some points, but on some other points, they are very, very predictable. That's why you know, it's always good to look for that predictable point, that when you look at the chart, you just know that this is either going up or going down. There's something very predictable, based on how you understand the charts. That's why it's not good to trade all the time, every day. If you don't see that, if you're not in that comfort zone, I think so many people talk about comfort zones like as if they're some terrible thing. But in Forex, your comfort zone is what will actually get you money, because it's where you see the charts best. So if you're not in your comfort zone on the chart, then don't take a risk. Just wait for that point where you look at it and you just know. The moment you just see it, you just know that that's where you're going to get your profit from. So those are the only points which you should trade. Now, the more you keep on reading and understanding things about these markets, the more your comfort zone expands. So when your comfort zone expands even bigger than what is already there, then you start seeing more trades and you start making more profits. So do not trade when you're not comfortable with what is in the market, because the moment you enter that trade, you start calling people, then start telling them, analyze for me, GBP CHF, is it going up, is it going down? Then if you're selling and the trade that is going up, then you say, let me call someone else. That's what you try to get someone who is looking at the chart the same way you're looking at it, but that doesn't really make a difference, because the chart will move where it's going, and if it's going against you, then you're still going to lose money even if 1 million people give you the analysis that you want to hear. So just trade in your comfort zone. Just be in your comfort zone when you're trading, and always spot those trades like that, so that you always make a profit. So something else I want to talk about is account management. Account management. I think from the beginning of when I started doing this show, I've always been trying to empower people to trade for themselves. Try to give you the knowledge, the tools, the advice, whatever is available. Everything on that website, the app, the technical analysis app. Literally anything that is available. You get it, and then you try to make some money for yourself. But that is still a very big problem. Some people just want to get money, give it to someone, and that person trades, and they keep on getting profit. And that is okay. I don't entirely discourage that, but it's very difficult, especially if you don't want to lose that money. So so here you don't know the risk involved with trading Forex, and Forex, it's some scary thing. There are so many people fear to talk about money. Some people are talking about money. It's a no. They don't talk about money. They fear to talk about money. Then those who actually talk about money, who are not afraid of talking about money, they fear talking about Forex. Because it's something to fear. It requires, so like any other investment. It requires a lot of thinking. And when something is beyond, like if something is beyond your thinking capacity, then you brush it off as something that is really, it's something that's not practical. Because there are things that we do which are easy. We get seeds, put them in the ground, and put some water in the ground, and the seeds grow. That is something very easy. You get some animals, put them somewhere, and they grow. Then they produce, and those ones also grow, and that is easy. If they fall sick, you get a doctor and they inject them. That is the stuff. Or you can go and buy goods at a cheap price, and you come back, sell those goods at a more expensive price. That's the stuff that we're used to. But trading Forex, stock trading is also a bit easy. You can tell when when a company is doing well and when a company is doing badly. So when a company is doing badly, you dump their stock, or you stop buying. Then when it starts rising from the bottom, you buy their stock and you make profit when it reaches the top. That is that stuff is very, very logical, and that is stuff that we learn that stuff and it's easy to do it. But now with Forex, with indices, with binary options, now binary people who trade Forex fear binary options. Binary options is something else. So Forex is something that really entangles people's minds. But the problem is the risk factor and understanding the risks. So when someone understands what is within Forex and they come to you to manage their money and they totally accept the risk, the risk is you could lose even more than what you've invested. I think you've experienced that if you're a trader for some time. There are times when that loss hits you so hard that your account even goes into negative. But they don't always come demanding for that money, but your account goes into negative. So you've basically lost more money than you have invested. Even other times you even lose more than that, you even lose the profit that you made. And that is very that is something that just bothers people's minds. But if you take the patience to learn and understand and know all the risks involved, then when you carry your money and you give it to someone to trade, you first have to go over all the trading strategies that you're going to use, and also come to an understanding that all of this money might go. It might go in the first day, or it might go in the 10th day, or the 30th day, depending on how you're trading. So when you understand those risks, then you can easily start moving forward. But if you give someone money and the day the money is lost, things become bitter. You start going to war with this person, then that just complicates everything. So before you give your money to someone, understand the risks involved, and also understand that there's a lot of work that has to be put in. So you have to understand exactly what's going to take place. So one way of people who manage accounts, you give people who manage accounts, they take people's money and they trade it. And sometimes they tell you the risks, sometimes they don't tell you the risks, and that's where the problem comes. But just be open, be as transparent as possible, and just let them know that your money could go in one of 1,000 ways, and let them understand what's going to take place. And even you who is giving someone money, understand what you're investing in, so that you don't end up being totally disappointed. So one way of investing money is by giving it to someone to manage your account. Another way is using automated systems. So you build a system, you put that system on your account, and that automated system will run your money. A robot. So another thing about robots is the idea of putting a robot into your account, and then you go to sleep and totally forget about it. That is also a very big risk. It's a very, very, very big risk. It's possible. It's very possible to have a robot that will not make a loss. It may be half a year. You might, even if you're checking on it, may not make a loss for all that time. But always be alert. Always be alert and see what's happening with that robot. So another way of managing an account is you can get a robot to manage that account, and then the person manages the robot together with the investor. So that one is a little bit, it's a little bit easier. You put the robot there, you test the robot over a period of maybe 1 whole year and see how it's going to perform in the good markets, in the bad markets, in the range markets. When things turn around, there are so many market conditions that come in, across an entire year. So when the robot does that trading from one end of the year to the other, then it has gone through so many market conditions, and just like that, you can edit. You can keep on adjusting that, that trading strategy which is inside the robot. You can keep on adjusting it so that it tackles all those market areas. And just like that, you will be very confident in that robot that you're using. Then you can put it there, and you can monitor it, having some faith, which is different from when a human being is actually running the market, because there are so many dynamics. Every time we look at the market, it's not like a robot will buy at exactly that point that you've programmed. It won't change anything. But as a human being, you might see so many opportunities in so many places, and you'll keep on adjusting your strategy in order to take advantage of all those opportunities. When something doesn't work out, then things go bad. But with a robot, for the drawdown, you can tell the robot that the maximum loss is about if you have like $100 and you put the robot on it, you can say your biggest loss should be 100 pips, which will be $10. Yeah, then your biggest profit should be like maybe 200 pips, which is $20. And you put it like that, just so that if it if the robot enters at a bad time, it will just hit negative 10. Then if it makes you a profit, it hits negative 20. There you'll have your good risk reward ratio, which is quite good. So how you build a robot also matters. The robot is as good as the strategy that you put in. A robot that has a weak strategy is a weak robot. A robot that has a very, very strong strategy is a very strong and a very good robot. And that's where the difference comes in. So if if it's not just a matter of having a robot and putting it there and just having all the faith that it's going to work, you need to test it and see how it's going to manage all the market changes that happen in a very long period of time, so that you have all the confidence to go forward with it. So today's events they're just that. Maybe let's just take a look at this Euro USD chart. I think the last time we looked at it last week, it was looking bullish. It was starting to look bullish, and we put the Ichimoku indicator there, trying to see if they could be if the events could turn around and turn this market into a bullish market. But it looks like it has gone bearish. And if you look at the chart, right now where the market is, it's under the cloud. It's under the cloud, and this the cloud has also turned bearish. If you're looking at your chart, and if you have MetaTrader, if you have the platform in, okay, there's just something wrong with my screen. Let me try and rectify that so that I get the market. Okay, so that I get the chart there. Okay, so now we have the chart. Okay, so the chart is now loaded in very well. So we can looking at this Ichimoku here. The cloud has turned bearish. This sandy brown cloud. Remember those colors? Sandy brown is bullish. Then this one, I think it was 3 store or something like that. 3 store is one which is bearish. That is the down Kumo. Now this Chiku span is it is clearly very far away from the price. So before I move to the edge of the chart, let me put this Fibonacci here from where this chart started climbing up. Let me see if I can get the body of the candlesticks. Okay, there it is. And sorry about that. Okay, something has gone terribly wrong. Okay, there it is. Without fine tuning anything, you can clearly see that price was supported at this 50.0 previously, and it's now shooting downwards below the 50.0. Sorry. And so looking at this Ichimoku indicator, I think now we are very comfortable with this Ichimoku. So this Chiku span, which is this green line, it is very far from the price and below the price as well, and that shows very strong bearish movement. So this is what was happening last week. We were starting to have some kind of bullish movement. Things got jumbled up there a little bit, but now everything is back in order. So we have this cloud here, which is in color 3 store. It's now in a bearish mode. You can look at the cloud, bearish. Then we have these two. These ones are called the Tenkan Sen and the Kijun Sen. So these two here, they're also bearish, and we have price clearly moving downward. So here we have some strong bearish movement on the Euro USD. So our next area of support is this 61.8, and the price there is 1.17530. Yeah, so that is the price right now. Whereas if price continues moving downwards, that level there we have it's about 22 pips. Yeah, that's about about 20 pips to be on the safe side. About 200 MetaTrader points. Yeah, so that is that is quite. Yeah, it looks good. It looks very good. If I load this RSI, so what we were talking about last week was one way of finding a continuing trend or a reversal. So for the reversal, you get your first you get your first feeling that of a reversal when price hits the oversold position, which happened at this point. So when price hit that oversold position, it started moving towards the bullish side. And then at this point here, price almost hit the overbought position, and then we had the continuing trend starting to form, and that is what we have right now. And where price is right now, it has also hit an oversold position, and yeah, so at that point there, you start counting your points, your points A and B and C. You remember, like from if you look at the history, this is how we found this reversal here. So first we get this point A. This one here. Actually, the point A was this one here, where the RSI went into an overbought position in an upward trend. So there we get our point A. Then point B became this one, and yeah, so now but now point B was a bit higher than point A on the RSI, so that cancels out point A. So this point B here becomes the new point A. Then the following high points have lower values in the RSI, so that's where we start getting our divergence, and we start looking towards the reversal. And the reversal actually happened, and now we have this downward trend. Yeah, so as this downward trend starts happening, we get the first point A here. It has hit the oversold position, so we start looking to buy. But then we don't have, we don't seriously have lower points. So we have the rising bottoms on the RSI, but we don't really have the falling bottoms here, though it went bullish for some time, and there are some good number of pips there. I think from this bottom they are about 30 pips. So there are some good pips there for a short-lived bullish movement, and it went to an overbought position there, and then it started falling again. So now we have this so this point, this current low point on the RSI, it's a bit it's a bit lower than this previous point. So this point A has now been scrapped off. We have a new point A here. Yeah, so where price is, where it has been previously earlier on this morning, is our new point A. Yeah, so now what we have to wait for is we have to wait for lower bottoms on the price itself to keep on moving downwards, and it gets more lower bottoms as the RSI starts creating some higher bottoms, so that we have our divergence, and then we can start buying sometime soon. Yeah, so I think that's the only chart we shall look at today. So basically, for this, okay, that's how you get the reversals. It's still something very important to this day, knowing when these trends are reversing and when they're actually continuing. So when you just follow that simple analysis, you can easily trace points of reversal and points where your trend will start losing its power. Yeah, so that you'd stop, you don't continue selling even when you see these things happening. When that divergence starts happening, the price might still be moving downwards, but you look at the strength on the RSI, that oscillator, and then you can easily know that this trend is about to end, and you could probably have an upward trend forming, or maybe just a small retracement. It's not good to stay in a trade when there's a retracement happening, because you're going to lose time. So you just keep on following that, and you'll be able to catch up on so many points of resistance and support, and you'll be able to get those reversals and those areas where the trend is continuing, so that your trades don't go into negatives, so that you don't get caught on the wrong side of the trade. Yeah, so I think that's it for today. just keep on looking at this Ichimoku indicator and try to get used to indicator. Yeah, so I think that's it for today. Have a good day. Goodbye.